Hongbin. He is Managing Director and Co-Head of Asian Economic Research and Chief Economist for Greater China at HSBC. Hongbin, thanks for joining us. I wanted to get your view here because, all right, we saw a figure of 49.9, so it's only just a contraction taking place, but we've had 3 months of it.
Sure.
Are we entering into a softer patch for the economy?
Certainly the economy has been slowing, will continue to slow in the coming quarters, as indicated by the PMI number, which is, by the way, is the leading indicator. It's going to tell you more about what's going to happen for the economy next three months rather than what's happening now. So, below 50, which means the economy is continuing to slow. But having said that, if you look into the details, actually the latest reading has been slightly better than the readings in previous months, as well as the readings in July.
You can't read too much into one set of data, though, 1 month's data. It's a trend, though, isn't it? I mean, the thing is, you're going to have little hiccups, whatever. You could see positivity 1 month, you could see negativity the next. But the noise out of China is getting more depressing.
You're right. I think probably one of the reasons that people worry so much about the global economy, and the logical here will be, if China be the world factory, if global economy slows, how can China hold up? I think that's probably one of the. But I would say, don't forget that Chinese growth, believe it or not, has become much less reliant on exports since the crisis.
The Chinese growth is basically being driven by investment spending. That's what it's not domestic consumption so much as that. And when that money stops being spent, what happens?
If you worry about the investment in China is going to stop, and then you have to really worry about the Chinese growth. But the key question is that I think it's very unlikely for us to see the Chinese investments is going to collapse. It will slow as part of the when the policy tightening starting to continue to filter through. But it's going to slow gradually rather than soon collapse. The reason being that if you look at the past few years, what has been the key driver for the investment spending? It's not manufacturing capacities, but instead is the subways, railways, highways.
They're going to be completed, aren't they, at some stage? But I mean, it is a vast country.
Eventually, yes.
Yeah, a vast nation.
Yes. But
there's also one other aspect. Okay, if we do see a slowing economy, we do have a central bank which has kept all the bullets. It can really loosen policy and get things going again.
Well, I think yes, if worst case scenario, of course, with the inflation starting to petering out, I think giving them some flexibility in the policy front to deal with any kind of downside risk. But I think this time around they don't have to come out with the cross-border monetary easing. Instead, what they need to do is the targeted easing, particularly some sort of additional fiscal spending, for instance, in the public housing area, for instance, to do some tax reductions for the SMEs. By doing that, I think it should be enough for them to maintain a growth rate of around 8%. I think 8% growth is more realistic and more sustainable.
Thank you so much for joining us.